There's growing evidence of a trend in Australia's biggest cities of rising demand for apartments, both for reasons of affordability and also for lifestyle. In the most expensive capital cities, more people are opting for apartments in suburbs where houses are too pricey, but apartments cost perhaps less than half the price of houses in those suburbs. We're seeing it in inner city and middle ring suburbs in Sydney, as well as in Melbourne and Brisbane. Some of these locations, typical houses may cost $2 million, but mainstream apartments in the same suburbs are available in the 7 or 800,000s. This trend has been particularly noticeable in Sydney and areas such as the Inner West local government area or in the Canterbury Bankstown LGA. Now, we've just completed an analysis of prices throughout Greater Sydney with a focus on price performance in the 3 months up to February 2023, before we started to see that widespread evidence of prices rising again in Sydney. Many of the major research sources such as Domain, PropTrack, Eskom Research and CourtLogic have recorded growth in Sydney's median house price and the median unit price in February, March and April, despite the economic disruption going on in the background, particularly the continuing increases in interest rates. But many of the individual Sydney suburbs had price growth before that general citywide trend clicked in. And in examining price data for suburbs right across Greater Sydney for the 3 months to February, we found 60 suburbs where median house price had decreased, but the median apartment price had increased. And this supports our theory that there is growing demand for apartments in locations like these. For example, in St. Peter's in the Inner West municipality, the median house price fell 1.2% to 1.5 million in the quarter under review, but at the same time the median apartment price for that suburb rose 1.6%, reaching 950,000. In Rockdale in the Georges River LGA, the median house price fell 2.5% to 1.57 million. But at the same time, the median apartment price for that suburb rose 4.5%. It's a big jump in 1 quarter to reach 705,000. But note the price differential there, with the median for apartments in Rockdale less than half that for houses in that location. The difference is even greater in upmarket Neutral Bay, where the median house price is 3 million after a 1.6 quarterly decrease, and the median apartment price for Neutral Bay is 1.18 million after a 2% quarterly rise. In Belmore, in the city of Canterbury Bankstown, the median house price is 1.39 million, but the median for apartments is 550,000, with houses falling and unit prices rising in the quarter under review. And other suburbs which are part of this trend include Balmain, Bronte, Clovelly, Kogarah, Manly and Mona Vale, Petersham, upmarket Vaucluse and also Warunga. Now there are many other examples, and it suggests, taken with other evidence we have been gathering over the past 6 months or so, that one of the dominant paradigms of real estate may be shifting. That paradigm dictates that houses on land always show better growth than do attached dwellings with little land content. And we think there is evidence around Australia from the past year or two that this may be changing. Demand for apartments comes from a number of different cohorts in the property market, including first home buyers, other affordable lifestyle seekers, and of course downsizers, with the downsizing market becoming increasingly prominent in markets right across Australia. The full list of suburbs across Greater Sydney where the median house prices have fallen but median unit prices have risen in the 3 months to February is quite extensive, and it indicates that this is a significant trend which may have some longevity.